Ladies and gentlemen, welcome back to our channel. In today's live stream, I'm going to discuss a couple of very important topics that may be on your mind if you're thinking about waiting on the sidelines, dabbling in the real estate market in a capacity of a buyer, seller, investor. What is happening? Because current real estate market very closely resembles a standoff from a national perspective. That's basically what we're hearing from a lot of the agents in other markets. And it seems like the sellers are not in any hurry to sell, and they believe in the pricing from yesterday, while the buyers are hoping to see the pricing from tomorrow. And as of a recent Fed announcement, adjustment to the rates, the buyers are also being squeezed out of their ability to purchase. So what is happening? What is going to happen? And what should you be doing as a buyer, seller, investor right now? So we're going to discuss in this live video, and I will reserve a little bit of time in the very end to talk about some of the questions that you guys might have and discuss, any of the questions that you may have in regards to the real estate market. For those of you that are new around here, my name is Nick Rastopchin. I'm a real estate agent right here in St. George. And for those of you that have been around, thank you so much for joining. And I'm very happy to see you on this live stream. Folks, so let's talk a little bit about what's happening in the Southern Utah real estate market. So there are a couple things that are in the play here. What we're actually starting to see is listings are starting to sit in the market a little bit longer. A lot more buyers are kicking tires, and a lot more buyers are getting placed out of the market. So as of April of this year, we saw a pretty giant rate hike that essentially caused a lot of buyers, nearly 200,000 on their approval ability. And then as of a couple of days ago, based on the latest Fed announcement, we observed the second greatest rate hike. In fact, average mortgage rate right now from a national perspective on a 30-year fixed is at around 6.995%. So we jumped by about 1.5% compared to what we were seeing just a few weeks ago, really. So we have had a few clients that are mid-transaction whose rate hasn't been locked that got affected by this. And in some cases, it puts people kind of on the edge whether or not they can afford the property anymore. So that's what's happening in the real world. Let's take a look at some of the numbers. We were fortunate to get some of these numbers presented to us by our partners in Title. And it looks like overall national mortgage loan applications are falling pretty drastically. And the interest rates, this hasn't updated it. So this still had 6.19 average and these numbers are for the month of August. Now, another thing that's really interesting about this market is that we're seeing an all-time high interest rates. We're seeing all-time high home prices, and the buyer activity is slowing down, but the prices aren't exactly falling. And the reason this is happening is because so many sellers are in a pretty comfortable position where they don't necessarily have to sell. Now, there's a small percentage of the sellers that have to sell, and those could be people that are moving right now, people that are maybe over leveraged, or a great deal of builders that pulled 50 to 60 permits and had a lot of spec houses going at once. And now they have to liquidate this inventory because the holding costs are beginning to cost them a lot of money. And we'll talk a little bit about the sellers later in this video. But while we're seeing overall slowdown in buyer activity, the deals are still happening. So let me tell you guys a little bit more about these numbers. In the month of August, there was a total of 132 listings sold in St. George and 259 in Washington County. So we're definitely seeing a slowdown in the number of units that are moving. But at the same time, days on the market are growing. So in August, we went to 38 days on the market in St. George compared to just 17 days on the market in July. And I anticipate this number continuing to grow because of the disconnect that I told you guys about in the beginning of this video. So many sellers are holding on to their guns and they're saying, you know what, I'm just going to stand my ground. This is where I'm at. I'm not going to lower the price on this listing. And another thing that's happening with the builders, overall the cost of this inventory comes from the folks that are comfortable with their current interest rate. And it also comes from the construction industry. Cost to build and overall cost of inflation and the cost of hyperinflation is transitioning into the bottom line. So the bottom lines are set pretty high. And if we look at the average sale price, I believe for a single family, we had at the very top. So average sale price, if we compare to a year ago, we went from 586,000 to 696,000 this year. So we still saw an appreciation by nearly 100,000. So this market is not quite yet seeing depreciation. The appreciation is slowing down, and we're starting to see some adjustments on some of the necessary listings. Now, what we're seeing right now as of the last week is a lot of the buyers are beginning to really pump their brakes, and they're saying, hey, I don't know if I should be able to purchase this, if I can. And, frankly, if those that are using financing are sometimes just simply priced out if the lender didn't lock in the rate at the right time. So I don't want to be all over the place in this live stream, so I'll just dive right into what to expect as a buyer right now. What should you be doing as a buyer? And should you buy, period? Those are all the right questions that a lot of the buyers are asking right now. And it is a bit of a confusing time for buyers because I had a lot of these conversations in 2020, around this time, 2 years ago, when people were watching the market and they were saying, you know what, I don't know if I should buy right now because this market is not sustainable. The prices are probably going to fall. And I don't know if right now is the right time to buy. Especially the folks that were using financing and were hoping for the market to crash. Now, I think a lot of people don't understand what a market crash or any kind of major correction typically comes with. And historically in the past, and this is what's so abnormal about this market, is that if the interest rates go up, the values typically go down, but we're not exactly seeing that just yet. And I know that a correction will happen, but possibly I don't believe that the correction to the tune that it has to happen in order to make things affordable again. I believe that we're going to see the disconnect in overall buying power. We're entering an affordability crisis for many, and those that are still able to make things happen. So my overall advice to the buyers is you could sit on the line on the fence and wait, but in 2020, all the way through just recently through April of 2022, we had incredible interest rates. And as soon as the masses caught on to right now is the right time to buy, what that meant to an average buyer is even though, yes, you could qualify to purchase $200,000 more in a home than you would right now, just based on the pre-approval, let's say at 3% versus 6%, was a pretty significant difference in payment for a lot of people, and nearly $200,000 the bottom line in terms of what they could actually borrow. But around then, when the rates were low, actually putting a home under contract often meant bringing 50 to 100 grand over asking. So because of that, a lot of folks were kind of sitting on a sideline and waiting until the situation improves. Now we're on the other side of that equation where after the Fed made the announcement, after Jerome Powell made the announcement that there are several more quantitative tightening interest rate hikes that affect mostly consumer debt, things like credit cards, auto debt, and things like that, the purchase in the bonds market, like the overall signals for purchasing in the bond market fell, and that resulted in the rates that we're seeing right now. So there are several more rate hikes that are slated for the rest of this year and possibly all the way through Q3 of 2023. What does that mean to you as a buyer? If you're able to purchase something and hold it comfortably, just like prices going up, rates going up, it can't really continue forever, because at one point or another, going into an election year, it turns into a political thing where we're going to have to stimulate the economy somehow. Right now, the Fed is doing everything they can in order to get the hyperinflation under control, completely disregarding the money that we're printing by the pallet and absolutely ridiculous spendings that we had over the last period of time. That's not the issue. We're going to fix this by creating an adjustment in the consumer debt segment. So anyway, this is kind of what I'm seeing. So my point is this: if you're able to purchase something right now comfortably to a point where the payment is not stretching your monthly budget, it may still be a good idea to get something even at a higher rate, because you may also be able to refinance that purchase later versus trying to chase the market. And the reason that I have to believe that the values aren't going to be impacted significantly is because the cost of construction has gone up considerably, brought to you with the same hyperinflation that caused for the cost of housing to go up, but also cost of fuel is up. And on average, in Washington County, if you were to purchase a piece of land as a developer, or if you're trying to build a pre-sold home and then spend your money on, the things that go above ground, just your overall cost of land, labor, and materials, I would say if nobody makes any profit, $550 would be probably the bottom line, like the absolute bottom line. So $550 cost, which typically means closer to $600,000 for any kind of new construction, and that's at cost. So I have reasons to believe that the inventory is actually trending down, and we're going to start to see fewer listings. And because of that, if and when we see rate reductions, we're going to go straight back to overinflated prices, offers with cash over asking, and things of that nature. So right now, as terrible as it may seem for a buyer, where, do I wait it out? The fear of waiting is that you could get priced out completely out of the segment where you're shopping right now. So let's say if you were shopping for a 4-bedroom home with a 3-car garage and you want to have some extra parking, entry point into that could be in low 600s right now because of some of the resales that still exist, and some of those listings I was telling you about that the builders are trying to move right now. So there's a decent chunk of inventory that is available right now simply because people are pumping the brakes. That inventory is going to sell through, and if you don't react based on this opportunity, I think that you may have fewer chances to have an opportunity at a similar home in the price range that you can afford, because the interest rates are going to continue to run away. Cash buyers, I find that a lot of our clients, and buyer activity, by the way, has not slowed down. Transaction activity has slowed down. So we have a ton of clients that are coming to town to shop, and a lot of people are a little bit uncertain, or they're getting closer to making the things happen. And those that have to buy are continuing to buy right now, and those that can comfortably buy are continuing to buy, while majority of the buyers are kind of in a browsing position where they're trying to figure out. And I don't blame them. It is a challenging time, and it's tough to tell whether or not you should buy now or you should wait. Now, if there's no limit and you have a decent amount of equity that you're bringing from another home, or you plan on doing only partial financing or maybe no financing at all, the world's your oyster. Right now, we have so many great options that are starting to get back into a deal territory. So a lot of sellers, when they see a cash offer right now, they look at it completely different versus, say, 8 months ago. When you bring a cash offer 8 months ago and the interest rates were low and there was a huge pool of buyers and everybody could afford, especially those higher end homes, the sellers treated that cash offer no differently versus a high over asking financing offer. Now, if you have a cash offer right now, the sellers will look at that offer wildly differently because you typically have no other competition. So a lot of concessions are happening, a lot of deals are happening, a lot of just overall calmer, more collected transactions are happening. You don't have to be in a hurry right now. You don't have to offer right now within 30 minutes or else this listing is gone. So it's not a terrible time to shop if you fully understand your situation. And if you're getting a mortgage, just make sure you can afford it. And you could plan. A lot of our lenders are really good at giving you an estimate on what that looks like, what you will spend in payments over the next year, over the next 2 years. And I think it is reasonable to believe that things will improve in terms of interest rates. I think inevitably whatever comes up has to come down. They're going to have to find a way to re-stimulate the economy. The question is when that happens, but I also think that your greatest chance of losing the game is by playing the waiting game. So that about does it for buyers. In terms of what is happening with the sellers right now, and just one more thing that I would like to touch on for the sellers and the buyers and the overall relationship. So I looked this up this morning, and Utah is actually amongst one of the states with the highest percentage of the homeowners, the people that currently own homes, to have interest rates below 5%. So going back to, in Utah, 93% of homeowners with mortgages have mortgage rate below 5%, a higher share than any other state. Next comes Colorado, Idaho, Oregon at 92, and 91%, and Montana at 91%. So what does that mean to the buyers and the potential of our future inventory? So if so many sellers are simply not in position to move up to the next property, a lot of people will upgrade their home every 3 to 5 years because they maybe want more garage space, maybe they need another bedroom, maybe they had a birth in a family, or maybe it's time for them to just get into a new house. So it was a relatively common thing in our market. If any agents are watching, let me know, how often do you think your market typically upgrades to a new home? I feel like in Utah, there may be a little bit of keeping up with the Joneses, so people really have to get the latest and the greatest. And a lot of younger families would upgrade anywhere from 2 to 4 years. Like that'd be pretty typical, where people are just moving up and upgrading to a new house, and then they're pulling out some equity, reinvesting into their new purchase, and continue to roll that money over. And based on the appreciation rate of mortgages, that concept was brilliant because you end up, growing your home without necessarily growing your mortgage by much. As of right now, based on majority of the homeowners in Utah, and I actually saw this percentage somewhere, I think it was over 75% of all the homeowners in America are below 3%. So a ridiculous amount of people, and that will affect home selling activity and future inventory in your state as well. Location, of course, will play number one role because overall demand based on the things that are happening in the community will affect how frequent and how well the homes will sell in your territory. But what that means here in Utah is that if people are not able to transfer their equity into the new property, or their equity is going to get destroyed by the interest rates on the new loan, they're going to be less likely to sell their house. If the builders are not able to offer a product that sells at the current, so the supply and demand, the market usually dictates prices to a certain degree where, if majority of your buyers no longer qualify to purchase a home at the current rates, which means the price should come down, but it's not going to make sense for many builders to build and not make any profit. So new construction will ultimately apply upward pressure on the prices overall, and to a degree will control inventory. We left the territory where the builders were pretty confident they were pulling 50 to 60 permits every other month, and they were putting up specs, and they couldn't sell them fast enough. Those days are gone, and the number one concern with builders right now is days on the market and potential increased holding costs. For a builder to have a home on the market any longer than it needs to, it could cost anywhere from $5 to $10 a month in holding costs, and that's cutting into their bottom line. And if they see any slide in the market, then those forecasts become a lot tighter. So who is selling homes right now? I would say the people that have to sell are selling right now, and they're selling successfully in certain instances. So if you're able to, or you have to move, maybe a family event or work, you just absolutely have to sell. Those folks are still getting it done. And we're starting to see fewer folks that, based on the previous scenario that I told you guys about, they're even considering putting their property on the market because it simply financially does not make sense. So if you happen to be in the category of those that has to sell right now, I would say hire your listing agent wisely And we are starting to see a pretty major drop-off in active real estate agents. Washington County board dues are due, I believe, at the end of this month. Maybe next month. I don't know. I just got the notice. And I'm curious to see how many board members we have after this renewal period, because based on the national statistics, an average real estate agent in America, out of like 1.6 million agents, and I should have been screen sharing this, but that's the one article I didn't pull up. So out of 1.6 million active agents, over the first 6 months of this year, most of them closed less than 4 transactions. So it's becoming pretty difficult for a lot of agents in this market. And if you're thinking about selling your home in this market, there are a couple of things that you have to consider. You have the 3 P's in sales. The first 2 is the product and the promotion. Product, promotion, and presentation. What are you selling? How are you going to market it? And what does it appear like in person? So homes are getting scrutinized a little bit more by the buyers right now. And we find that just a few months ago, there were fewer comparables that are active on the market and available. So in just about any price category, all the way from entry level, although entry level is still pretty short on inventory, and going up to high end, an average buyer has 10 to 15 homes to walk through, and not one of those homes has a pending offer or a threat of fighting with somebody else. So the product has to be pretty much perfect, I would say, if it's new construction, or if you're selling your home and you're thinking about whether or not you should declutter, whether or not you should stage your home, whether or not you should remove some things. I would say right now is the time to make things look perfect and eliminate any potential projects that may be in a house. Small things, scratch here, dent there, leaky faucet, small things that you could do a lot of DIY stuff without investing a ton of money doing things like a kitchen remodel. I think we're outside of the territory of kitchen remodels, and we're entering a more realistic value per square foot. So prices per square foot are starting to drop. Average in Washington County, I would say, is below $350. And that's dependent, of course, on the overall square footage of the property, location, whether it's a 1-story or 2-story, but that's kind of your general compass in terms of price per square foot. So if your home is competing with 15 other homes, you want for it to show the best, smell the best, look the best, and most certainly create the best availability and showing conditions. Work with your listing agent on that one. And the second P is the price. So if just a few months ago you could start when the values were beginning to slide a tiny bit, and there were deals that were happening within 1 or 2% below asking, a lot of sellers would do a top-down approach, and they would start to list their home really high, probably like within $10 to $20 sway in price per square foot compared to the rest of the neighborhood, and then they would reduce it until they hit the magic number. Now, that could turn into a race to the bottom in today's market, because if you start really high and your home happens to get stigmatized by being overpriced, then the chances of you actually selling that property, they're still realistic, but the market could run away a little faster than the price drops. So while things are happening, if the interest rates are going up, some of your buyers could be getting pushed out. There could be a little bit more inventory, although I don't think that would be such a huge concern. But people have choices, and keeping your home in the market longer is riskier. So our current days on the market are actually, let me show you guys. So in August, average combined days on the market in Washington County were just 33. And median list price was at $639, and average sale price was at $614. So compared to August of 2021, that is still a 15% overall market appreciation. So let me stress this point, though. I would still highly recommend listening to your agent and listing your home within the deal territory, and especially, and this could apply to other markets as well. One other important thing to consider is what is the likelihood of somebody bringing in external cash into your community. We work with a lot of clients and business partners in California, for instance, that say that, hey, there's certain parts of the Bay and certain parts of LA County where people are still offering 100 grand over asking. Deals are still happening, and there's a lot of cash that's coming into the communities coming in from the outside. Now, a lot of markets, similar to Southern Utah, we still have a lot of clients that are moving here because they want to move, because it's a lifestyle change. It's a safer, cleaner, better environment for their children. And overall, they're just done with wherever they're living. Industry joke is that there were several governors and the president that were dubbed Realtor of the Year through some wonky policies and overall crazy changes to their communities. They had forced for people to go to Texas, Utah, Florida. Southern Utah is at the top of that list as well. So people are continuing to make those moves happen. And that means that if your market is one of those where people are leaving that market and there's not a ton of external cash that's coming into that community, days in the market could look a little worse. And you may have to get a little bit more aggressive with promotions. You may have to get a little bit more aggressive with concessions that you're doing. Like a lot of Southern Utah builders on the standing inventory that they have are offering credits. They're offering credits towards buyers' closing costs, credits towards buying down their points, credits that make financing and affordability of that particular property available to a potential buyer. And actually, while we're on that topic, I wanted to take an opportunity to have a shameless plug. Guys, we have, and if you happen to be in one of those communities where you feel like moving, we have a couple of interesting things right now. Our luxury Dixie Springs home that has a double RV garage is finished. It should be receiving a CO in the next couple of days here. This home is absolutely beautiful, has about 1,800 square feet of RV garage space, and the seller and the builder, the investor on this property, is pretty motivated to move it. Currently, there is a credit up to $30,000 to the buyer. So with a full price offer, a buyer may receive up to $30,000 seller concessions towards their loan buy down or closing costs. So we're starting to see more of that. One of our other listings had actually just had a $90,000 price drop. The sellers on this one are excited to make something happen, and I feel that this one is priced really, really well. So I wanted to share that with you guys. I posted the links for both of these listings in the description below. So I'm not going to take too much more of your time telling you about these things. Just so you guys know, wanted for our viewers to have a crack at this if anybody is interested. Oh, and it looks like I just lost one of my cameras. So you get to see me up close and personal now. So what are the investors doing in this market? The investors are still making deals happen. And if you're thinking about investing in real estate, we're actually starting to see a lot more opportunities on the entry level. So a lot of listings like townhomes, condos, your typical rental inventory were unattainable for a long time because there was such a huge amount of people competing for those. And now we're starting to see a little bit more inventory, and depending on how it works out. So if somebody that's bringing in a 1031 exchange, somebody that has a bunch of cash that they want to roll over from another property, may be in a better position, because if you're buying it cash on cash returns are starting to make sense. If you're looking to obtain financing, hopefully you have a huge down payment, because otherwise it is getting challenging to get some of these deals to cash flow. But involving some of the creative financing and finding a value add opportunity is still key. Investors are still making deals happen on multifamily, single family, any types of fixers. And in the property management field, in terms of how safe is it to get into an investment property right now, we find that higher end rents are experiencing a little bit of a slowdown. And I think that a lot of potential higher end renters are just kind of on the fence right now. They're reconsidering their ability to buy. Maybe they're terrified of losing an option to buy based on the rate hikes in the future. And I think that there's a little bit of a slowdown in higher end rental demands. Lower end rents, anything that's in the $2,000 range, like $2,000 a month for like your typical 3-bed, 2-bath with a 2-car garage in St. George. Those properties are still getting leased out pretty quickly. But in the very near future, I feel that we're going to enter a pretty massive gap in affordability where average American family is going to struggle to purchase a home unless something magical happens, and CFPB had alluded to that in April of 2020, and they had talked extensively about letting people refinance their current rates into a 40-year mortgage, or maybe if they introduce some 40-year mortgages with, with an option at a lower rate than prime. If that happens, then I think the prices will continue to go up. And that's where you may be able to find the value add in the rentals that you're buying right now, because if the price of the entire market goes up, then the future appreciation of your property goes up also. But in terms of rents, I feel like we're going to enter this period where a lot fewer people will be in a home buyer category and they will go back into a renter category. So I feel that future rents are going to be pretty secure. Given the current rate of devaluation of the US dollar and inflation, I still find that solid assets like real estate are probably more recession and inflation proof. And I don't personally see, based on the metrics that are being posted right now, that we're going to be out of the dark anytime soon. So there are ways of getting it done. If you guys have any questions about buying, selling, investing in real estate right here in St. George, I would absolutely love to be of service to you guys. You can drop me a comment on this video or reach out to me directly. My contact information is all over this channel. So if you have any questions at all, we absolutely love helping people move to Southern Utah. And if that's something you're into, there's plenty of videos on that topic all around this channel. So, or if you're thinking about selling your home here and moving somewhere else, we would love to help you with that as well. Let me see if we received any comments so I could get back to a little bit of a Q&A. Jack commented, he said, is the market different for new construction purchased from the builder versus sellers who are owners occupying the property? Jack, it's a great question. I think I've kind of touched on that a little bit. So yes, the market is different. And again, it splits into two categories here. It splits between those that may want to sell and have to sell. In our current market, the builders that had overcommitted and pulled a lot of permits. So if you're thinking about moving into the area and the payment makes sense and you're looking at new construction, especially middle to entry level new construction, like we see great deals on some townhomes, we see great deals on some middle of the pack, not necessarily high end, but above starter home level, like anything from 4 to about 900,000 right now in Southern Utah, new construction that's standing builder inventory. Chances are you're going to get a pretty decent deal. Chances are the builder is going to contribute towards your closing costs. The builder is going to contribute towards your rate buy down. And even if that's not offered in the MLS description, everything in real estate is negotiable. So as a buyer, you need to know your strength. So that's kind of the philosophy with the standing inventory that the builders have. Now, again, talking about the category of the sellers that have to sell right now, the homeowners, they're doing a resale. So if somebody already owns the house, not a builder, and you're looking to purchase that, that is kind of split, I don't know, I would probably say 90-10 in my experience. About 10% of the sellers right now have to sell because, they're thinking about moving, they have to sell. Maybe they're selling grandma's home, maybe they're selling their home because they had to relocate for work. for whatever reason, if they're leaving and they have a deadline, maybe they already have another home under contract, those sellers are typically a lot more willing to make a deal happen. A lot of those sellers have a decent amount of equity in their home because, as we talked in this video earlier, the market continued to appreciate. So even if somebody bought in 2020, chances are they have a decent amount of equity in their home. Now, granted, they don't want to give up as much of that equity as they don't have to, but I have been seeing deals happen. Several of our clients have gotten properties under contract with a leaseback. Several of our clients have gotten properties under contract with contingency on a sale of their home wherever they're selling and buying here. And typically in the market that was a little bit more seller dominant, no concessions were happening, no deals were happening. Now that's for those sellers that have to sell. If we're talking about new construction, like a lot of builders that have large construction companies are also offering, so not standing inventory. If you're looking to go and start a new house, maybe a custom house, maybe a pre-sold. A lot of builders transitioned into doing pre-solds again, where you come in, you select the lot, you select the plan, and you actually have time to breathe and think and do all these things that we haven't been doing with builders in general over the last 2 years, really. A lot of builders were only building spec houses. You couldn't make any adjustments, any changes. You pretty much get what you see, and in most cases, it's a pretty solid product. But right now, if you're looking to build in Southern Utah, there are several builders that are offering builder credits towards your closing costs. Like, I know that Ant's Homes has a promotion right now where they offer up to 3% towards your closing costs. And that's even if you start a new build right now. Like, we just got a client that just started a new build with them and they qualified for that promotion. So essentially all of their closing costs on the financing are going to be covered by the builder. And that's not something that we've seen for a long time. They also have incentives for cash buyers, and it's not a terrible time to buy from those sellers. Now, going back to the standoff idea of the video, there's also a category of the sellers that don't really have to sell, but they're just testing waters. Now, with those sellers, we're still back to that kind of standoff scenario where sometimes a buyer may make an offer within really close to asking or a few grand below, like 5 to 10,000 is kind of the sway right now, and the sellers will absolutely not take it. They're seeing a lot less activity. A lot of listings are sitting on the market with fewer showings. So I think those sellers are slowly going to start to lose their optimism, and most likely those listings will just go away from the market because, again, if you can't justify to sell, why would you sell? So I hope that answers your question. There's a little bit of a difference between how the sellers are acting based on their needs or motivation, rather. I don't think we got any other comments. Folks, thank you all so much for tuning in. I'm going to wrap it up. If you're watching a replay of this video, drop me a comment below. If there are any real estate professionals, mortgage lenders, realtors, what are you seeing in your neck of the woods? We absolutely love to hear from our neighbors all over because we do business with our clients that move to other states, and we have a lot of clients moving here from literally every place in the world. If you're watching this video because you're thinking about relocating to St. George, please get in touch with me. The contact information is right there. So if you're even remotely thinking about moving to St. George, maybe you're just starting your journey or maybe you're already actively shopping, I'm happy to put you in touch with the right neighborhood and potentially the right property. Just reach out to me and tell me a few things that you absolutely love, absolutely hate, a must-have. And I'll be able to connect you with the right neighborhood because we know St. George. Thank you all so much for tuning in. Signing off.